And if they get in, your energy costs are going through the roof. Okay, they're going to go through the roof. You won't have a farm very long. I will tell you that. I just noticed behind me John Deere tractors. I know a lot about John Deere. I love the company, but as you know, they've announced a few days ago that they're going to move a lot of their manufacturing business to Mexico. I'm just notifying John Deere right now. If you do that, we're putting a 200% tariff on everything that you want to sell into the United States, so that if I win, John Deere is going to be paying a 200%. They haven't started it yet. Maybe they haven't even made the final decision yet, but I think they have. John Deere is going to, and anybody else that does this, because it's hurting our farmers, it's hurting our manufacturing. And if you do that, you're going to have a 200% tariff put on the product that you make in Mexico, right across the border. They think they're going to make product cheaper in Mexico and then sell it in for the same prices they did before, make a lot of money by getting rid of our labor and our jobs, and really a great name, because John Deere is a great name. I buy a lot of John Deere, tremendous. I'm one of their big customers. I buy a lot of John Deere product as a private person. But if they're going to do that, we're going to put a 200% tariff on everything that they want to send back into the United States, which means one of two things. Our country's going to make a lot of money, or they're not going to build, they're not going to open. And Mexico's taken a tremendous amount of our business, especially over the last few years with this group, because this group doesn't know what the hell they're doing. They have no idea what they're doing. Mexico is taking a lot of business, and a lot of it's done and financed by China. China is building massive car plants now in Mexico, and it's the same thing they're building. And a friend of mine builds car plants, and he said the biggest ones in the world are being built in Mexico. They're going to put Detroit out of business. They're going to put car manufacturing out of business in the United States. And I'm just telling everybody involved in this stuff, we're not going to rip off the United States anymore. We're going to put big tariffs on those cars that are coming in here at 100 to 200%, and they're no longer going to be competitive. So you better stay in Michigan, and you better stay in the areas that you're in right now. And what I really want you to do is come in and build your plants in this country and put our auto workers to work, because we've lost about 60% of our auto working business over the years, and we're going to get it all back, every one of them. We're going to get it all back, and we're going to get it back quickly.
The way it's supposed to work is there are 3 AIs that are asked to provide investments, provide potential companies for the ETF to actually be investing in. It's supposed to spit out a number of companies. They can range any geography and any sector. For example, it could, suggest something Latin American, and that means that those potential investments might not necessarily reflect something that Warren Buffett himself is buying or holding, but it's just something that the AIs are recommending based on data that's fed to them about Warren Buffett, about the things he says, the things he does, his letters, and that type of thing.
Let me correct myself. I was on vacation last week, so I'm a little rusty. It did launch, Eric. This ETF does exist.
Yeah, you're forgiven.
I'm sorry.
No worries.
I'm sorry.
Just this once.
I actually didn't know it launched either, to be honest with you, and I should know. Okay, this is kind of, to me, like a derivative of the whole 13F thing, where the ETF goes in and looks at the stocks that hedge funds say they own in 13Fs. There's been mixed results in that. I don't know. This almost seems like a little gimmicky, and I'm really liberal with giving ETFs the benefit of the doubt.
You like hot sauce.
Do you really think that AI is going to be able to imitate Warren Buffett? Like, it just seems like, I don't know, like a little...
It's definitely one of the criticisms, and as somebody put it to me, you can just go and buy funds that are already run by some of these big names versus funds that are mimicking some of the big names. And when you look at the whole ETF lineup of AI-powered ETFs, so that can be ETFs that either are getting input from AI or ETFs that are tracking AI companies. I think those are the 2 broad categories that you can put it in. When we're looking at them year to date, they're not really getting inflows, and the performance is really, to compare to the S&P 500, only one of them is beating the S&P 500 so far. So, if you're thinking about AI recommending a ton of companies to you and you're switching up those investments a lot, that's one of the criticisms, because if you're switching up a lot, the thinking goes, all that turnover is actually going to hinder your performance.
And before I let you go, I'm curious about the list here. You know, I named some of them: Warren Buffett, Druckenmiller, Tepper, etc. I mean, how did this team pick which investors they were going to mimic here?
I think they're just looking for some big names. As Eric said, maybe it's splash. It's people you would really recognize. It's a total of about 10 of them that they're looking to input. To their credit, to the company's credit, they say that they have had a lot of success in terms of beating the S&P 500. So they've been sort of playing with this and tinkering with it for more than a year now, and say they've had success. So we'll see how well this one does and how much it manages to attract cash.
Narendra Modi meeting with several tech CEOs Sunday in New York ahead of the UN General Assembly that's going on all this week. Among the attendees was NVIDIA CEO Jensen Huang, Alphabet CEO Sundar Pichai, and Accenture CEO Julie Sweet. You can see the rest up there. The topic, of course, artificial intelligence. Tech companies from Apple to Google see India as a prime investment area thanks to a growing middle class and large workforce. And I was able to catch up with two of those attendees, Huang and IBM CEO Arvind Krishna. Let me give you first Wang's overview of the meeting with Modi, praising Modi.
This is an extraordinary time for him and time for India because it's a reset of the whole computing stack.
And getting the deficit under control. What happens if we don't, given that both presidential candidates have presented plans that would add trillions to the deficit if they were passed?
You know, I don't want to contemplate that. We have to be ready for it. We worry about it, but we don't want to contemplate that. This country is so critical to the world to be fiscally responsible because it sets a benchmark for the whole world to react to. And so getting ourselves aligned. We have we have a wonderful economy. It's grown from the pre-financial crisis to now almost to twice the size. It's outgrown its issues. It's restructured its issues. It deals with capitalism as the best, with pluses and some minuses and all that stuff. If we forget that in the strength that we have to show the world, that's the problem. And we have to show the world how to have a glide path to bring the debt, keep the debt where it should be, and not let it get out of control. Because if it does, the whole benchmark for the world starts to go out of sorts, right? I mean, everybody looks to the U.S. Treasury yield bonds and notes as being the benchmark for the world, and we got to keep that in check. And ultimately, that's going to come down to a fiscal management practice that has to be resident in any government. I think the reality is when you get in there, always bring you more to I've got to figure out how to balance this thing. So I wouldn't take the political process today to what happens afterwards. But, you know, we need better tax policy, better spending, all the things that are on the table. But if we don't get in control, that is a real pressure point. And ultimately, the leadership of the United States could become.
Bond market is actually backed up. I mean, and should we follow these short forwards, what they're pricing in for the Fed? They backed up almost 20 basis points. 10 years come off, rates higher by about 10 to 15 basis points.
Why? Why is that?
Because we were pricing in recession. If you go back a week or two ago, I mean, this extraordinary movement towards pricing to recession, hard landing recession, and the fact that the Fed was behind and would have to get there, it was too much. That being said, I think we've retraced to the place that's probably okay. I always get a kick out of that, where the bond people say, well, the equities are rallying because Fed's moving. Well, the bond market already knew, it was already in the price that they were moving. Listen, I think one thing that's a big takeaway is when you go 50 and you talk about we're willing to keep going and you talk about a recalibration they needed to do, is a little bit of we put foam on the runway. The Fed is receptive. Now that inflation, we're running 2% by many measures, under 2%. You got a Fed that's be sensitive to the economy, sensitive to labor. So that's good. I mean, is that a positive for equities? 100%. So the best way I value equities is I always look at cash flow discount by the cost of debt. Today, the cost of debt is still elevated because of where the Fed is. And then if you look at multiples, it's just not. The equities aren't that interesting. You're still throwing off good return on equity. 18%, 19%, but you're trading at price to book of 5 times price to book. You're paying a lot for it. You talk about 24.5 times PE off of trailing, 21.5 off of forward, but that's assuming 15% growth of earnings. You're just paying a lot. And you think about for the last couple of years, extraordinary top line revenue growth from tech that motivated the market higher. Listen, I think the numbers will continue to be good, but the market's pricing that today. So they're just okay. If you said to me, I did a presentation called Moving the Needle, would I buy more yielding assets? I definitely would buy more yielding assets because they're at better price than equities today.
Okay, so
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, make sure you go like and follow the TikTok. And we have Trump on tariffs. Says he'll go after China because China's building factories in Mexico and want to move those cheap goods inside the United States. But guys, we've seen this movie before. It used to be the United States building those cheap goods in China and then moving them back into the United States in order to sell them at a high price. And we know our big corporations are still doing that. Where do you think China got the idea? And remember, the Crypto Teacher told you. And then we have an AI ETF. But guys, we know the stock market and cryptos are ran by an algorithm. And eventually, if you're smart and you can take advantage of the technology, you'll set up AI what can do all your trading for you. And remember, the Crypto Teacher told you. And we have the tech CEOs meet with India's Prime Minister. And why, guys? Because China, India, these emerging markets are about to rise. And NVIDIA's CEO says the plan again, talks about the Great Reset. And we have Bank of America's CEO on all this debt. And we have to get it under control. And why do we need to get it under control, guys? Why? Because we're going to a level playing field in this digital economy. The United States dollar will no longer be the world reserve currency. Still going to hold a lot of power, but a lot of these countries are going to get off the dollar and use their own. And remember, the Crypto Teacher told you. Now we have BlackRock's Rick Reeder says that the bond market was preparing for a recession and stock prices are too high. And of course, guys, that's why I'll keep telling you about the emerging markets. Right now, we're seeing India's stock market hit all-time highs because of growth. Now we have the Fed cutting rates. And as they cut rates, a lot of that money is going to flow into the emerging markets, but they're cutting rates because we have holes in this economy. The labor market is taking a beating, but at the same time, as they're cutting rates, inflation hasn't went anywhere. When you look at everyday consumer items that they have to pay on a monthly basis. And we have gold pricing keeps hitting all-time highs. And they talked about how to short it. But guys, the only thing you have to do is look at the central banks. The central banks keep buying up gold because they know fiat is dying. So the only thing you have to do is follow the Fed. With all these geopolitical events happening, gold is still a safe haven. And we have Joe Biden. And it says that his mic was hot when he was talking about China. And we know China is going to be that next superpower for this fourth industrial revolution. The only thing you have to do is take your time and look at the Belt and Road. You're going to see the rise of China's digital yuan backed by that digital SDR. And remember, the Crypto Teacher wrote about it a long time ago and told you a long time ago. And we're seeing it play out. And guys, we know who are the biggest dealers on the planet. And that's your big banks and big corporations. And remember, the Crypto Teacher told you. Because he knows. When it comes to the NWO, it's all planned out. You have a wonderful day.
Well, I think all of us are reluctant to ever declare mission accomplished. But certainly the risks have shifted. I look forward and I think, which risk am I more worried about right now? A surprising uptick in inflation or a surprising uptick in unemployment? It's the latter, at least it is for me. I think right now we still have a strong, healthy labor market, but I want to keep it a strong, healthy labor market. And a lot of the recent inflation data is coming in looking very positive that we're on our way back to 2%. So I don't think you're going to find anybody at the Federal Reserve who declares mission accomplished, but we are paying attention to what risks are most likely to materialize in the near future.
Is a gold trade. Even as it hits another record high today, there are some converging signs right now of potential, and this is the key, potential weakness. It's been a juggernaut so far. But joining us now to explain and suggest a trade to stay ahead of this possible decline is Scott Nations, the president of Nations Indexes. And Scott, it was another day, another record price for gold. Gold miners are doing well, but what makes you think that this particular trade is going to run out of steam, and then how do you capitalize on that?
We believe Xi Jinping is looking to focus on domestic economic challenges and minimize the turbulence in China diplomatic relationships, and he's also looking to buy himself some diplomatic space, in my view, to aggressively pursue China's interest. China continues to behave aggressively, testing us all across the region.
What's causing, and we talked about it, probably GERD goes away, asthma goes away, sleep apnea goes away, diabetes goes away. If you can lose weight, all these things kind of get better. So everybody that needs these and might be obese probably should have them, but they are very expensive. Why? What should we do?
They are very expensive, and there's no single reason why a drug is expensive. There's no single reason. For example, if you have the middlemen, the pharmacy benefit managers, charging sky-high, asking for a sky-high list price so they get a better rebate, of which they take a percent, that's going to drive up the cost for the people who don't have the insurance or don't have the net price ends up being lower to the patient, but the list price is still really high. Now, that's not the entirety of the reason. There is no single reason why drug costs are high. But again, you've got to balance that profit motive, that incentive to create, with the ability to afford.
What do you expect to hear from the CEO of Novo Nordisk?
I expect a rope-a-dope, that we're not going to learn a whole lot. He's going to say that it's a cost to develop, it's a cost to manufacture, it's a cost to deliver, and et cetera. But what we do know is there's new drugs coming out. There will be competition, and when that competition emerges, the price will begin to come down. So this is a process we go through, and sometimes people get impatient with that.
Going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China. But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy. And you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York from COVID Stories 3. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.